Warning, there is math in this video. If that's the kind of thing that makes you want to throw your computer out a window, you may want to pick up one of our other videos. May I suggest Collateral? It has a joke about a movie in it. Still here? Okay, here goes. Interest is the real fee charged by lenders for money being borrowed. The idea is that the lender will make more money over the long term, while the borrower gets the benefit of the money right away by being able to buy things like homes. Interest is represented by an interest rate, which in the case of a mortgage is charged monthly along with a principal payment. So how does that rate work? Well, here's the math part. To calculate the amount of interest in your payment each month, there's a pretty simple formula. The interest is charged on a yearly rate, but it's paid monthly, so we have to get that monthly rate. You do this like you would expect. Take your rate, let's say it's 4%, and divide it by the number of months in a year. Then multiply that number by the remaining balance of the loan, and you get your interest payments. I guess it's really not that hard. Let's do an example. 4.5% divided by 12 is 0.00375. Then let's multiply that by, say, 180,000, our pretend balance. That month, the borrower will be paying $675 in interest. Then they'll pay a little on the principal, and the next month they'll pay a little less in interest. That whole process is covered in depth in our amortization video if you're interested, which we'll link at the end. So, given the numbers here, it should be clear that a lower interest rate results in both a lower monthly payment and a lower overall cost of the loan. There are other costs to consider, however, so don't base your loan decisions on interest rate alone. Many costs go into a monthly payment. Mortgage insurance can lead to a higher monthly payment, for example. Also, one last point of caution. Advertised interest rates are not always what they appear to be. An interest rate can be lowered by paying higher closing costs, but it can take a decade or more for that closing cost to be made up in the long term. We'll do a video on buying points later on, but be sure you aren't paying massive closing costs for something that looks like a great rate. Talk to your mortgage professional about picking the right program, but talk to that person armed with the knowledge of how your rate works. If you have any questions about mortgage interest, please leave them in the comments below or email us directly so we can find a mortgage specialist in your area to answer your question. Make sure to like this video and subscribe to the channel so you don't miss any of our weekly educational videos. Thanks for watching.